Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. We can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It is the 8th. It's a Monday, and I think we kind of have an interesting set of macro movements going on here. So let's just go straight to the charts first. Oops. So here we got on our volume profile in the S&P 500. Of course, we had the non-farms payroll number on Friday, and we moved down a little bit, and then kind of went sideways, but recovered it for the most part on Friday. But overall, I would say that Friday was not terribly eventful, but other moves in other places. Overnight, we're a little bit higher. Once again, now, in the 10-year, you can see Friday they kind of went all over the place off of the non-farms numbers. It was really quite interesting. But now here, I think Monday, they finally did the thing that they should have done, which is lower, because I think that the numbers here show that there's going to be less demand for treasuries because of inflation. But I think that the numbers are kind of like, they're not good, but I think that like the effect of the stimulus and possible inflation and things like that are probably going to be a more dominant factor. And more importantly, we got like this dollar. Okay, so the dollar has come back up quite a bit here. Hold on a second. My microphone is like not quite right for whatever reason. Okay. The dollar just got crushed on Friday and it's come back up. But here it's come back up hardly anything. I was reading like Zero Hedge and some of the news reports, and they're like, the dollar's been strengthening. But then I look at it and I'm like, it's hardly a pittance compared to what happened on Friday. Okay. Coming back over here, oil looking pretty good. This overall, it looks like the administration isn't necessarily just going to open things back up with Iran. So oil is running. Gold higher, silver higher. Silver not as quite as much, interestingly enough. And copper took a pretty good run towards Friday. Maybe extending it a little bit today. We come into ES at all-time highs. And then we come back over here and look at some individual stocks in the pre-market. I see there, Scott, SEC filings show they bought $1.5 billion of Bitcoin in January. So is that why? Well, they're up 2%. Bitcoin is up. Bitcoin took quite a pump here, up to 45,000. And I believe, correct me if I'm wrong, but don't the Ethereum futures start today? We can go and look that up, but I can see that my stock proxy for that, MSTR, is now almost to 9,000. So that's not looked too good for my puts, does it? But here again, remember, I've been saying, well, they might be able to last until the Ethereum. I don't think that they're going to, crash just before the Ethereum futures go live. So I think I kind of forgot about that a little bit, but I don't know. There just hasn't been a whole lot of fanfare about it, has there been? But I still kind of see this. Well, I'm going to have to go back and do my numbers. It'll be interesting to see what the numbers say about today, because we're going to get like a double spike off of it, right? I think, let's come back. Let's do it. Because I think when I run my numbers that we're going to get an unusual event. Okay. Anyways, some of the most shorted names look to be doing pretty good in the pre-market, though. GME up 5%, BlackBerry up 4%, Bed Bath & Beyond 1%. The AMC is not really; it's only less than 1% here. When you come and you look at the move in GME, I don't know if that's really all too significant. And really, the big thing is in GameStop is going to be tomorrow when we find out how many of the shorts have actually pulled off, right? So that's where we're at on that. All right. So let's see what number Bitcoin gives us here. We expect to begin accepting Bitcoin as a form of payment for, well, then Elon Musk is about to get red pilled here, man, on Bitcoin, because there is some real pain with using Bitcoin for actual payments right now. Okay. Done processing. Let's open it up and see if it shows us the move or not. Oh, I shouldn't have closed it. Oh, it's okay. Shouldn't have closed the little generator window because I would be able to see the last value. Now move this over here. Man, I've been posting these for 3 years now. It's the 8th. Okay, so it kind of shows the pump again. Interesting. Okay, so this is, yeah. So even though it met a new high, I guess it's not unprecedented, is it? You got pretty similar looking pattern on these sides, and you get a spike up that ends up not being as high, probably because at that point the blockchain is pushing a little bit more volume through. You can see though on the degree of overextension, they are well past what they've ever done before. So I really think that the cycle is about to end. And you got to be concerned for, so $1.5 billion. And if that turns around and all of a sudden that's worth $500 million, is that a big deal for Tesla? I don't know. I would be going and doing some research on that because, like, let's just admit it, Tesla has just been going crazy for the past, I'd say it's been a year now, right? Just can't be stopped. Everybody says it's overvalued. So if something were to come in and change the fundamentals over there, for instance, a decline in Bitcoin causing a decline in Tesla, that could be ugly. Yeah, depending on how much of Tesla's current valuation is really speculation versus actual book value, right? But too lazy to go and calculate that. I don't care enough. Well, that today's thing isn't going to include the 44,000. That they will have to wait till tomorrow for that. You watched a ton of Roaring Kitty and didn't realize he was well, he's like a deep value investor. I mean, he's still doing like YOLO plays, but he did actual real work. He was like had a spreadsheet and he had a way of valuing the companies that he's getting into and running through them all. And he's very aggressively using margin, trying to double his account every year. You kind of have to wonder how that really ends up working out in the long run. But I think we're going to probably find out, right? I haven't heard much from him, though. I'm sure his lawyers have told him to shut up. Oh, that's interesting. So in Discord, we were talking about the percentage of traders that make money. And I had mentioned the Brazilian survey. This guy says, I know about the study and would say from personal experience that it's mostly true. However, there are a few profitable traders who make a killing. Yeah. It's funny to see the criticism of that study saying the failure rate is high because of Brazilian traders, as if their technical analysis is different. What's this one? I'm not sure which study Alligator's posting here, but we document that only 1,000 most profitable day traders, less than 1% of the total population of day traders from the prior year, go on to earn reliably positive abnormal returns net of the trading costs in the subsequent year. But the stock picking ability of these investors is remarkable. Top day traders, based on prior year ranking, earn gross abnormal returns of 45 basis points per day on their day trading portfolio, while tens of thousands of day traders with a history of losses in the prior year go on to earn gross abnormal returns of negative 17 basis points. That kind of really suggests, like, the whole thing, like, you want to make 1% per day. Well, pretty sure that 28 basis points is less than 1%. Actually, how does it work? Because a basis point is 100th of a percent, right? By the way, does the microphone sound correct? Because it seems like it seems to me that something just sounds a little different to me. And like the proximity effect, if I'm way back here versus right, well, I guess it's okay. I don't know. Seems a little weird to me. Now, I'm still short Bitcoin, not gonna lie. What is the offer they're gonna give me? Because if they give me a good one, I could maybe buy more. Well, I don't know if that's gonna work because it'll probably turn really hard. There it is right there. Says that last was 015, which is like what I paid for it. So I think that my puts are so far out of the money that it almost like doesn't matter what it's doing, and the only way that I make or lose anything is if Bitcoin like really crashed, which I guess was the intention. And I do think that there's a risk that Bitcoin crashes, but not enough before the expiration. So I don't know. So now I am seeing the street tweeting that Tesla invested in aggregate 1.5 billion in Bitcoin. This is a problem, guys. Like, straight up, this is a problem. Okay, you say the microphone is fine. Thank you, Win. Somebody had a ton of Dodge 2 years ago, but sold off for small profits. Well, but at what price did you kind of have it in, right? It's kind of the question there. Yes, Tesla has invested 1.5 billion in Bitcoin at 0.003. Oh, okay. So I guess you would have made something because it's like 7 cents at the peak, right? Or not at the peak. It was even higher than that, but it's 7 cents now. The robots are turned on. Yes. Thank you. Brandon actually tried to go short there. We'll see what he does. Okay. So we need to come to, let's see here. Where can we look at it? What's the best way to look at their balance sheet? TSLA. Oh, wait, what? They got rid of the statistics screen on Yahoo Finance? Oh, boo. Oh. Oh, wait, here it is. I was looking at the wrong. I'm like, what? Where'd it go? Okay. Its enterprise value is $803 billion. What was their revenue? $31 billion. Their total cash is $19 billion. So that's like a 5%. Well, I'm not exactly sure what the math would be. I think that I would need to come in and have a valuation spreadsheet, which in Tesla, no matter what I put in there, is probably not going to factor out correctly anyways. But then I go in there and I put that their earnings is 5% less. I don't think that that's a huge impact on them, is it? So I'm not so sure that that's really a big problem. Because what I'm sitting here and I'm worried about is when you get Bitcoin to the point where a decline in Bitcoin has an impact on the real economy, right? Then I start to get concerned, especially when I'm looking at this and I am almost completely positive. I would say that there is an 80% chance of a major crash in 2021 in Bitcoin, where it loses 80% plus of its value. So they're pushing it really hard as it is. But there's still that whole tether thing going on, and I don't know, man. We'll just have to play it out and see what happens. Oh, they don't roll. Well, I'm just saying, when I do my math, it seems to me that Bitcoin declining wouldn't have a huge impact on Tesla. This rally is too much all because so Keller, I would be, sometimes when you look at a move in Bitcoin, it's a little difficult to ascertain why it's actually doing that. Because when we come over here into, say, currencies, so I think currencies are probably the most reliable as it pertains to how they will move based off of news, because the reason that the currencies move is largely based on the movements of large banks. The large banks trade with each other and trade the currencies back and forth, and that's what is the largest impact on currencies. The retail traders over there in currencies have a very minimal effect on what's actually going, and especially with the way that forex trading works. When you look at when you learn about how forex trading actually works, what the broker actually does, it's really quite I can't believe that anybody would trade that. But it's mostly the large banks, and so when you get a move, you're seeing what the smartest and most sophisticated investors in the world think about that particular piece of news, right? In Bitcoin, it's very different because, one, there isn't a very well-established or accepted view of the economics behind Bitcoin. I, for instance, have my own view and model that I use to value Bitcoin, and it's very rare that you see anybody else with a public model anywhere close to that. In fact, I go and I look at it, and I look at like what some of the big bank analysts say about Bitcoin, and I look at their ways of valuing it, and I go, well, okay, like that makes sense, but this is not a very good way of valuing it, and here's why. I feel that, like, I think it was was it Morgan Stanley, or I don't remember who it was that was making calls on Bitcoin, but I was like, my model is better. It's just straight up, it's a better model. So when you go into the moves that it makes, I think that what often happens is you'll get a piece of news and somebody will make an investment off of that piece of news, but it was an investment that they were probably going to make anyways. You know what I mean? Like, there's these people that are interested in cryptocurrency and they want to get exposure to cryptocurrency, and they might time it at a certain time, but I think it is very rare that there is an instance where a particular thing happens and all of a sudden somebody says, oh, I do or don't want to invest in Bitcoin now because of that piece of news. I don't really think that happens a whole lot. And it is large, and there certainly is not very much of, oh, because X thing happened, I need to move this much money around because, right? That doesn't really happen at all. Because the business side of Bitcoin, the people that actually have to use Bitcoin to transact, it's largely the miners, right? That's why when you do come down to like where the miners start losing money, like, I'm not going to say, I hate that people say that like that's a spot that they're guaranteed to hold or something like that, but it is a spot that matters, right? Because if it goes below that, some people have to just shut up shop, right? Anyways, but this is why I'm kind of looking at the Tesla thing and I'm going like, okay, so if Tesla experiences $500 billion, $700 billion, or not billion, $700 million in losses because of that, is it a huge deal for that stock? Well, it sounds like it's an impact, but that it's maybe 5% of their total earnings. So I guess that means it doesn't matter. You just got to be careful though about like the, if it gets the ball rolling, you know what I mean? You get Bitcoin's going down, so now people start trading Tesla as correlated to Bitcoin, and Tesla takes a big tumble, and then that causes certain retail traders to have to puke, and it's just like in the GameStop thing. Like it looks to me like the majority of the retail traders that were invested in GameStop held their positions. When you look at, there was a photo I saw the other day that they sold a net like 1 million or something like that in GameStop. But it wasn't even anywhere close to like the total amount that it appears that the retail traders own of GameStop. You know what I mean? But there was some guys out there that had really big positions and were trading those positions on margin and so forth. And so I think that those days last week where GameStop like really took the hits, like Tuesday and Thursday, probably margin calls. And so it's like, even though they aren't selling and stuff, because of those people that were kind of reckless with their trades, it kind of hurts everybody, right? So that's the kind of the sort of a thing that I'm concerned about. But I'm not so sure that it's a large enough impact for us to really worry about. There's 140% short. Yeah, but that has nothing to do with what I just said, Gary. So let's talk about that, though. There was 140% short interest on GameStop. According to S3 and who are the Ortex? No, it doesn't. I said that the retail traders sold a net 1 million. It has zero to do with how many were short. Sorry. Has nothing to do with it. But we can talk about that if you want. Because the latest numbers that we have off of these people with models that purport to claim how daily changes in the amount of short interest say that it has been declined by 40 million shares. And so it's now something like 50% of the float. So there's this big argument. The big argument over in the GME thing is, did the shorts really cover? Do they believe the S3 numbers or not, essentially? And when you guys first pointed this out to me, I said, oh, it doesn't matter. I don't think that it decreased enough. And I wasn't really paying attention to it. But now that I look back, I'm starting to think that probably the S3 numbers are correct. So I believe that what will happen is we will get the short interest numbers will come out tomorrow, and they will show that the short interest declined by 40 million shares, and the rest of the longs in GME will bail. And it will be very ugly. That's what I think is going to happen. That's my prediction. And I don't know. The thing that's really getting me right now is that I'll go on the Wall Street Bets subreddit, and people will have these due diligence posts that are like, here's this thing and this thing. So for instance, one of the things that they showed was that, retail traders sold a net 1 million shares. So the person comes out and they say, oh, you see, retail traders haven't sold enough for the shorts to have actually bailed last week. False. The net amount that retail traders sold does not tell you the net change in the amount of short interest, right? Because you don't know which of those sellers you don't know which of those sellers are being paired up with buyers that were short versus new buyers, right? There's no way from the data that we have to match those up. But if you look at the amount of just net selling, just overall selling, not like the net change in the positions, but just the net number of short orders out there, there is certainly more than enough for shorts to have covered 40 million shares. So I go and I look at these and I'm like, are you guys stupid? I'll read through the thread and I'm like, nobody is saying the thing that matters. They completely misunderstand what's going on in there. And I'm like, are these guys just that stupid, or is this intentional misdirection? Zero Hedge is asking if MSTR has bought more Bitcoin in the past few days. Well, so the number, so here's the thing, is that I don't believe that my model can accurately predict what the very top number is going to be. Because, and I don't think that any model ever could, because what my model shows is how much speculation there is in the market compared to actual value in there. And when that speculation reaches a certain amount of value, then the chances of a crash happening soon thereafter are very high, right? So I can come in and I can say there is likely to be a crash in 2021, extremely likely to be a crash in 2021. In fact, I'll eat my hat if there isn't a crash of 80% or more in 2021. Well, I won't actually eat my hat, but whatever. I have money on it. I guess that's the best you can do. I'm not going to eat a hat. That would be really bad for my digestive system. But You can put me on record here. There will be a crash in 2021 in Bitcoin. And I would put it at 80-90% certainty. Okay. But because it's based on speculation, there's no way for me to tell how much the speculation will get in terms of like a higher price. You know what I mean? Are you all out of game? Yeah, I am. I'm not in it right now. I stopped out. So I made $50 net trading one contract. I should have saved a lot more of it. Pick a number. No, but you can't, like, I can give you a time frame in which it's going to crash, but to pick like an actual, like, how do you pick a top in a bubble, dude? Like, that's insane. Pick a number. 21. There you go. 42. Yeah, 2021. I can give you a time frame in which the, well, then your model sucks. I think what you're saying is just absolutely stupid, Gary, and I'm quite shocked that you would be saying something like that, because you of all people should be able to understand that it is impossible to pick an exact price in of a top in a speculative bubble. There's no combination of economic factors that you can go in and look at. The only thing that matters is at that point is how many people buy into the bullshit and fall for it. It's just like in GameStop. Like, what is the top of in GameStop? Nobody could say. But I can give you a time frame and I can tell you that it's likely to fall apart within this time frame. So I can tell you it will definitely crash in 2021. Well, I say under 10K by the end of 2020. That one was wrong, not sure. Remember I said it was like, well, probably 2020, but then the Ethereum futures came along. So now the Ethereum futures have come out. Okay. There's going to be a bubble. I bet you could do a study of previous bubbles to determine exuberance levels and stuff. Well, but that's kind of exactly what I do, though, Keller, is my model tells you what the value is, and then I look at how much speculation there is in the market compared to the value, and I use a ratio. And then I know that once that speculation reaches a ratio, that a crash is inevitable, and we have passed that point. But when you look at past bubbles, the amount that it's able to go once it hits that point, it's not like an immediate wall, right? It's like there's a point they pass it, it's going to peak, but how high that peak is, I can't pinpoint that. What is the cost to attack Bitcoin for an hour? Well, I don't know about that. You could go in and you could definitely do a blockchain attack like they did previously where they lock the chain up. But I don't know how much that costs them to do. I kind of suspect that the people that were doing that didn't find it to be too effective last time around, and that's why they're not doing it anymore. Like, if you really think that it's going to keep going, then go out into August and buy calls on MSTR, right? I think the model is easy. So the math behind my model is not incredibly difficult. No, it's not. That doesn't mean that actually generating that number is easy. It's something like 300 lines of R code. Snap down to, I haven't been looking at Snap. Oh, no, not yours. Okay. I know that like creating a logjam in Bitcoin is possible, and it's definitely happened. I mean, we've seen it happen before, right? But it hasn't happened recently. Like, it happened in 2017, and then it happened in the other rise in 2019. But in the one in 2019, it was kind of like they just gave up because it seemed like that the investors didn't care. I get this feeling that people go into cryptos over the weekend and then pull out to trade again on Monday in stocks. So I do think that there are a lot of traders that do that, but they're probably not going to have an aggregate impact on the price of anything. The amount. They're just like new traders that are just overly anxious and want to keep trading all the time, you know? So this is a really common thing when people first start trading, is that they want to do nothing but trade. Because it's addictive, frankly. And yeah. Oh, by the way, Zero Hedge tweeting that silver is up 20%. Oh wow, I did not see that they ran there. The 6J is also running here, and the dollar is plunging again, almost to 91. Do you say 716 million to attack Bitcoin for 1 hour? That to fill up the what did we call it? What, I forget what we even call it. Is it the memory pool? Yeah, it is. The mempool. Wow, how do you get 716,000? I'm not sure I understand why that's relevant at all right now, though. Oh, I don't think that it's that much. That's interesting. You must be talking about something different. You must be talking about like to do like a 51% attack or something like that. Once Ethereum goes up more than Bitcoin, then Bitcoin. Well, in order for Ethereum to outperform Bitcoin and there to be a flippening, I think that you have to have another crash. Like, I think that it would happen in a crash. Like, it'll happen like everything falls, Ethereum doesn't fall nearly as much as Bitcoin, and then on that next run, then Ethereum would surpass it somewhere, you know, within like the first third of that move or something like that. He must be talking about the 51% attack. If that's for like a 51% attack, then that's like really concerning to me. Because 716 million for 1 hour is a lot. But you would only have to do that once. I thought you were talking about the memory pool. At this point, I would be more concerned about the memory pool. So look at the memory pool. Pending fee in Satoshis. It's getting pretty high, actually. 0.9 Bitcoin. 0.09 Bitcoin, depending on where you're showing it. Let's say times 0.02. $900? Oh, $716,000? That's even worse. Yeah, okay. For 1 hour. Well, but the thing is if anybody pulled off a 51% attack, period, I think that would be the end. I think you'd only have to do it once. I think you'd only have to do it once to undermine, completely undermine confidence in the system. My model is, I'm very specific about what my model does and doesn't do. But do you think that a 51% attack is coming along here? All I can tell you is that it's what it's worth compared to the value based on the actual transactions that are happening in the Bitcoin economy. But yeah, I'd be a little concerned about this. Let's see here. So where can I zoom it out here? Yes. All time. So like when you come in here, where are we compared to all time? So here's where I'm talking about that, like in 2017 and 2018. You know what, Gary, if you want to come in and talk to me on voice, you're more than welcome to do so right now, because I fail to see how what you're talking about is relevant to this specific discussion. So do you see these spikes right here? These were like when the blockchain was under attack. They basically made it so that you couldn't transact at all. So where we were like there. So if somebody were to come in and start doing a spam attack in the blockchain, basically you're putting in a ton of transactions. I don't know how much that costs them, but you gotta wonder, like a company like Tesla, right? This is where I kind of the reason I'm getting into this is Tesla owns 1.5 billion because they want to be able to do transactions in Bitcoin. Well, they obviously weren't around that during this, because all of the retailers that were using Bitcoin for actual transactions back over here got screwed. And they all, like, a large number of them stopped doing it because it was cost them too much to do the transactions. And then, yeah. Clearly, Tesla wasn't around for that. Because you're going to get that. So people don't want to use it because it actually costs them more money to transact with Bitcoin than to use the regular money system. And then you lose money on all the Bitcoin that you had to own. What do you think about the current bull market vaccine rollout? Ton of positive earnings reports, stimulus plans. Do you think the market can keep up? Well, so let's talk about stimulus, because it seems to me that stimulus is the big thing right now. They want to, I think that they're going to have $1,500 stimulus checks. But now today, the Democrats are saying that if you have children, we'll give you $3,000 per child. That's a lot. I'm doing the math now on my own because we're doing the taxes and everything. And I lost about $40,000 in taxable income in 2020. Made less than 2019, right? But if this stimulus keeps up, I think I'm almost to the point where I've made more from the government stimulus than I lost from the pandemic. Janet Yellen said if you make less than 60K, you will receive a stimulus check. Well, I didn't see anything about that. Workers who earn $60,000 per year should receive stimulus checks. So I don't think that really tells us the piece of information that we need to know. So anyways, the issue is that they want to put a lot of money into the economy, basically. Snap. What do you want to hear about Snapchat? Snapchat is I think that Snapchat as a company, I don't know anything about its current market movements or anything, but I think that Snapchat as a thing is basically past. I think that people that would have used Snapchat are more interested in using TikTok right now, and that Snapchat's market, what do you say, market percentage of the market is probably going to continue to decline. You say it went up a 9%? Okay. I'm just, as a longer term, meh. There must have been some, so let's see here. News. Why snaps popped today? Solid fourth quarter results. They have a net loss, but it was better than expected growth. Meh. Go for it. I mean, I'm not really a huge fan of like directly shorting things, but okay. Anyways, more important stuff. The economy. Okay, so they want to do $1,500 checks, and now they're saying they're going to give you $3,000 checks if you have children. But there's been this whole thing. There was this whole argument about who should get it. And I think that they're still going off of 2019 tax returns, which sucks because I have one less kid. But it doesn't really tell you who has been affected by the pandemic and who hasn't. So where do you set that threshold, right? Because there are people that maybe they were making, $100,000 a year, and now they're making half that, right? So they're not going to get any stimulus, and they're still hurting. It's these kinds of things. So Congress was saying, well, we will make this one less broad. And when they were setting like the ground rules for like how they're going to debate the stimulus bill and all of that, they put something in there about it, but it was incredibly vague. So we don't really know at this point, as far as I can tell, who is going to get stimulus and who is not. It sounds like Janet Yellen is saying, well, it's definitely going to be people that make $60,000 or less. So less than the median income. But the rest of the people, I don't know. And there's this thing that like, okay, but what about all of the people that make between $60,000 and $80,000 a year? Because that is a significant portion of the technology suburban voters that have been helping the Democrat Party right now. You know what I mean? So there's this huge thing about how broad it's going to be, and we don't know. Okay. So then Larry Summers comes out and he says, this is too much stimulus and it's going to have a negative effect on the economy. And a long time ago, he actually put out some like actual numbers, and he said like, this is how much money you're putting into the economy already, and this is how much you want to add to it. And this is like the aggregate supply that's out there. And so if you do this, then you're going to get inflation. I don't know how accurate or effective his numbers are. I would really like to see a study on this, but this is where I kind of come in and I'm like, okay, so where are all of the numbers on this? Because normally by this point, I would hear some big, thing about Goldman Sachs put out a study that shows this or that or the other, and they're not doing it. But we know that Larry Summers is opposed, or he says that it's too much. And there have been some other people on the Democrat side of the economic field that have raised concerns. So then last night, Janet Yellen came out and kind of put down those concerns and said, well, the risk of doing too much the risk of doing too little is more than the risk of doing too much, or something to that effect, right? And so everybody's like, oh, well, Janet Yellen says that it's okay and she knows what she's talking about, so it must be fine. And I'm sitting here going like, dude, she's the Treasury Secretary now. Like, her job is to cheerlead what the administration's policy is. And she did not come up with that policy. I guarantee you that much, right? This had been set in motion long before she ever came along. She is not an independent voice on this. And in my opinion, what you should be doing for like what is the net aggregate economic impact of the next stimulus, I'm not listening to Janet Yellen when she tells me that. If you want me to pay attention at this, because if she had come out and she had said, well, here's the numbers, and went through this big long thing, then maybe I'd be like, oh, okay. She's still an economist. But she's like, the risk of not doing too much but the risk of doing nothing is more than the risk of doing too much. It's basically like, well, I can't tell you that everything's going to be fine, because if I actually went and did the economic numbers, it probably wouldn't look good, but I can't go against what my boss is saying, or they'll can me for sure. So it's a total cop-out. So I have, it was just like with Larry. Although Larry wasn't Treasury Secretary, but Larry Kudlow, he said plenty of things while he was in there. Overall, I thought he was really good, and he gave a lot of good information about what was going on in the economy to kind of temper the market's fears and everything. But I wouldn't have considered him to be an independent. If they were about to do something really, really stupid, he wasn't going to go on television and say it, right? And apparently Larry Summers will, but Janet Yellen won't. That's what it looks like to me. Am I wrong? Did Elon? No, he did. Tesla owns $1.5 billion of cryptocurrencies. That's confirmed. Tesla invested a total of $1.5 billion in crypto. This is being reported by Bloomberg. I will read it to you here again. Tesla says it invested in aggregate $1.5 billion in Bitcoin as part of an updated January investment policy, and may acquire and hold digital assets from time to time or long term, according to a filing. Expects to begin accepting Bitcoin as a form of payment for its products in the near future, subject to applicable laws, and initially on a limited basis, which may or may not liquidate upon receipt. May invest a portion of such cash in certain alternative reserve assets, such as digital assets, gold bullion, gold exchange, traded funds, and other assets as specified in the future under updated policy. So that's why we were going back and we were trying to determine what would the net impact on Tesla be if there was a Bitcoin crash. But we determined that it was not a significant portion of their earnings. So, well, now that's an interesting point too, is that it seems like Bitcoin or like Tesla is buying up on that news. Well, they're up 2%. So I guess up 2% is not unreasonable for Tesla. But if you were to start seeing like double-digit percentage increases in Tesla because they own Bitcoin, it seems apparently 1.5 billion is like a drop in the bucket for their earnings and so forth from what we just did. So I wouldn't get too excited about it. Here again, if you're trying to play a stock off of cryptocurrency, the one to look at is MSTR. Well, the S&P 500 action since we've been here has been awfully slow, but it's still been a steady increase. I mean, it's not huge. It's just been from 93 to 97, but it's going. And it sure looks like on the open that 3,900 is a upside target. 2 points is 2 points, as long as you're getting them consistently. Do you foresee a larger overall correction in the larger market? In the larger market, I don't know that I really have the data to make a call that bold. I can only say that there are certainly risks out there that it appears to me that the market is undervaluing. And one of the risks that I think that the market is undervaluing at the moment, but it appears is starting to value in, is the risk of increased inflation. Because what they're doing is they're putting a lot of money into consumers' hands. And I think that there's a really good chance, based on the amount of money that they're putting in there and not putting into the supply side of the equation, that you will get demand outpace supply and create inflation. What do you make of testosterone decline? I haven't heard anything about that. My favorite book on investing, if you're investing, is One Up on Wall Street by Peter Lynch. You want to invest, that's where I would look first. That kind of gives you the introduction to it. You know, maybe it is a space that we should explore more in the future. How to properly value companies and these kinds of models. But I've seen a lot of people on YouTube pulling up Excel spreadsheets and doing that kind of work, and I don't really find that all that interesting. You know? When I come out and I look at what's out there, I'm thinking, what are the things that retail traders don't know, aren't looking at, and they really should be, and they're missing. And I try to focus on those things. So stuff by Mark Douglas is I hear it with, again, that just the thing that every time I hear Mark Douglas, I just get a little like, because it's not like it's a bad book. It's just that everybody treats it like, just read Mark Douglas and you'll get all of the psychology stuff out of the way, and then you'll be an effective trader. And I'm like, no. Because in my opinion, the reason why the vast majority of traders have psychology issues is because they don't actually have a consistent edge. If you don't have a consistent edge and you're just, your feedback is based off of random rewards and punishments, then yeah, you're gonna have mental issues. Can you imagine you walking around your house and your wife would randomly be nice to you or beat you based off of, completely random? Well, okay, maybe that's a bad example because that usually happens to most men anyways. But you get the point that I'm saying here, right? Like if what you're trading it's completely random, then you're going to have problems. You're going to have mental issues, of course, especially when you're losing money off of it. Oh boy, here we go. I was just joking, guys. My wife is consistently nice to me. Very consistently. I would say I'm very low in agreeableness and she's pretty high in it. Doesn't mean that she just is a pushover. It's kind of funny because she usually doesn't believe me on things. I'll be like, this thing, it's not here. And she's like, nah, I think it is. I'm like, okay, go look. And then it's not there. And never believes you anything. She's got the... She spends a lot longer in the cognitive dissonance phase of things than I think. Well, I don't know if that's unusual or not, but more than I do, at least. Douglas offers edge plans. What is that? Is that a consistent strategy that you can employ in the? I don't know. Like here's my question. People ask it all the time, and when I was learning, I don't think that I really understood. what they meant. So what is your edge? What is it that you know and that you do that gives you a consistent probability of beating the market? Right? Well, I can go in and I can actually like enumerate some of them, edges that you can potentially have. For instance, if the order flow in a market, it becomes too much one way, you will see orders will pull out of the way, move around. But then after that, there's a really high probability based on certain market factors of having a reversal. Okay. And you can trade that. But there's competition for it too. So the fact that there's competition for that trade is a good thing, but then you have to be able to take it first, right? Nothing. Wait, what did you He offers ways to trade. Well, okay. Anyways, but I think that when I ask the question, what is your edge? What I'm really asking is, what is the specific market inefficiency that you're taking advantage of? Can you prove that that inefficiency actually exists? And then if you can prove that that inefficiency actually exists, how is it that you're taking advantage of that? And that you will be able to better take advantage of it compared to other people. Because what most people come in and they say is like, oh, well, I'm really good at picking out patterns or something. And then you go and you add all of these indicators on the chart. And it's like, dude, there's a robot out there that's any edge that's in that he's already taking out. You can't, it's very, very difficult to go and use the same forms of analysis that every day trader has been using for the past 30 years and make money off of it. It's like it's old information. And meanwhile, you have these guys using incredibly sophisticated forms of analysis, and machine learning and all of this complicated stuff on top of that, that's light years ahead of that. And you're still trading like it's 1979. Right? Like if you go to a quant firm or a high frequency trading firm, one of the big things that they're going to look at is here's the market inefficiency, and they spend a great deal of time measuring that inefficiency and determining based on what that inefficiency is and the current market conditions, determining their sizing, right? So there's a key that I want to point out is that if there is a real market inefficiency, you should be able to measure it. You should be able to tell me how many ticks on average that market inefficiency is. And then we could go and we could start doing some other stuff then. With, for instance, if there is a market inefficiency that head and shoulders pattern has a certain probability of turning into a move of this much, you should be able to go in and say, okay, based on the rules, here's how far it is. And then you could go in and you could say, how many people out there are actually trading it? Or try and venture a guess. But you should be able to get to a number that says, okay, once this many shares are trading it, anything over that eliminates the inefficiency, and then it actually becomes a bad trade. Right? That makes sense? You with me here? What language do you think is the most applicable to learn for trading, or that could be used to help you trade? I wouldn't look at it from a language perspective. You're talking programming language, right? I mean, Python and R have the best tools to do the really sophisticated kinds of analysis and algorithms on things, right? But the bigger barrier or problem is always going to be the platform and the quality of data that you're getting. That's why I think that NinjaTrader is so good, because it does all of that hard work for you. You have a good back tester, and then it's C#, so it's like it's not a bad language. Okay, there are a few bad languages out there, but it's C#. So you learn C# and you make it work, and then when you need like a more sophisticated tool like some of these libraries, you just have to go and find it and figure out how to integrate it. So I think we're going to be doing some of that this week. So we need to finish our work on co-integration. So I got the indicator working. I'm not sure if what I'm seeing is correct. So there was a version of it in NinjaTrader 7. So I think what I need to do is install NinjaTrader 7 and hope that it works with my data, or have bots show me what his was, do it for me, because he has NinjaTrader 7 installed. I know his data works with it. And then we can compare them and see if it's correct. And then if it is correct, we can try doing some trading strategies that use it to see if we're able to find some profitable trades with it. But then after that, I've been doing some reading about hidden Markov models and directional movement, which was very interesting to me. In fact, I think I need to go and look at that again. I'll wait. I don't want to go into it too much because Bots isn't here, and I want to explain it to him and see what he thinks about it. But I think that we need to go and take another look at the zigzag indicator. So I think that there are some problems with it, but we could resolve them in the same way that we resolved them in the pivots indicator. But I'm starting to realize a few things about the zigzag that might make it more effective for what I think we would want to do. Okay, so I am seeing oil is falling here and the equities are falling here. Well, the only reason why that move makes me curious is because of the way that the treasuries stepped up. But I'm realizing now that the treasuries have been somewhat elevated on the day anyways, so maybe that's not such a big deal. Anyways, I'm wondering if the zigzag indicator could give us better trend signals than the moving averages. So I tell you what, the news media is just going to have a field day with this news that Tesla's in Bitcoin. I wonder this move where it stepped over 40K. It looks to me like it did happen early in the morning, so that boost may be because of Tesla. And not Ethereum, but I'm telling you, especially with the Ethereum futures going live, I think you got a couple of issues coming up with Bitcoin. Okay. Oh no, that's interesting because the E-mini is opening up here. It's really, really quiet. Okay. So GameStop ends up opening up 10% higher. We'll see if they can get over Friday's highs. Is going to be the first spot that I'm going to be looking at. My testosterone has got through the roof once I started support. Okay. It doesn't work that way, to be honest with you. You want to increase your testosterone, go work out, do lift heavy weights. Meme stops just flip the other way, it seems. Well, so let's zoom in here. There we go. Okay. So it's been a little bit of a slow open, but there was a little bit more, a little jump in activity there, and that's why I jumped in. I was going to immediately flip on me because of that. Yuck. Yeah, I think I picked a bad timing. So I'll just let that one play out. Okay, well, GameStop is turning down and is now towards the overnight lows. So interestingly enough, it looks like the E-mini is outperforming compared to the NASDAQ. Not sure what the deal is with that. So my robot's not being too bright today. Okay. Good push there, but not quite new high. Can see that the dollar is now below 91, well below 91. So dollar just continues to get crushed here. Okay. Well, not quite there yet. It's a real slow going, isn't it? That they're not really eating into that 8.99 yet. Is there anything wrong with just finding the lowest prices something is traded in at the relevant past and setting your limit right at that low? There's dumber strategies, says RJ Will. I'm gonna bet you that if we went and we programmed that it wouldn't be profitable, because the issue that you're gonna get adverse excursion on that, right? So something you got to think about with a limit order is that in order for your limit order to get filled, there has to be market orders going against you, and you have to wonder, if I'm at the low and I'm literally like just below the low, and they go through me and they fill me, what kind of market action would cause that to happen, right? And what are the chances that something really bad just happened, or that there's been a fundamental change in the framework and I really don't want to catch that anymore, right? And so with those kinds of strategies, that's where you kind of have to look at that sort of stuff. And then furthermore, it goes on to just why should that particular spot have any kind of real significance? Could just be chance that was the low before. Depends on how much money you want to lose, says Blunt. Yeah. Well, I mean, like, let's take it a step further. What is there anything bad with putting a short just above, the high in the S&P 500? Why, yes, there is. Because this market tends to break highs. So they've eaten a couple of large sell orders here, but they're still looking pretty bullish. And GameStop not looking so hot right now. Some of these other ones, so AG looks like it's going okay. Most of their gains, though, are from the overnight. You can see they're kind of pulling back here. And Tesla, well, MSTR is up, but not a lot. Actually, that one's kind of interesting. And Tesla way down here. Yeah, that's very interesting. So pretty much everything is kind of looking like it's just moderating their overnight gains, but Apple looks down. And it looks like they're going to take me out here, huh? Yeah. Okay. I just think that would be the most fundamental support I get, what you're saying about how market tends to beat all-time highs. I just feel conflict in my own head about it all. That makes me feel like, well, I don't think that there's anything to get, Keller. I think that the vast majority of what you see from the market, that from a technical perspective, might as well just be random. And so there's a lot of retail traders out there making conclusions about what is common or what is a good strategy based off of noise. And they're not actually finding things that are actual real inefficiencies. So that's why I say I think the question you should ask yourself is, what is the specific inefficiency that I'm taking advantage of? Why does that inefficiency exist? Right? The inefficiencies that I'm taking advantage of largely exists because most people don't have the programming ability or sophistication to find. That's why I was going on about you want to use RSI. You realize RSI was released to the public in 1978, right? It's been like over 30 years that's been around. You're gonna have to find something a little bit more sophisticated to find an edge in this market, because the edge in that has basically already been mined out. Well, you can make a profitable system with RSI, but you have to take on a lot of risk to do it. Right? Okay, it looks like this one is maybe going to turn out. So it doesn't look like my original trade was necessarily bad, but I really could have gotten a better spot. The only edge, well, that's okay. That's certainly not true. That the only edge is cycles, and furthermore, you have to prove that cycles has an edge. So this is where again I'm saying, if you have a specific market inefficiency, you should be able to. You should have empirical evidence that suggests that market inefficiency exists. And in an optimal case, some empirical evidence that suggests why that market inefficiency exists. So cycles, I don't know. I have one thing that kind of works on oscillations and it shows some edge, but it's a little questionable. I'm not willing to put the pronouncement on that one that it works well. Joseph did go long, though. I don't really care. AGOGE. That would, so you called it one time. Who fucking cares? What is the comment saying? Even a blind mouse finds a cookie every once in a while? Okay, just because something is old doesn't mean that it doesn't still apply. Like, I think that the quants can do what they want to do, but if they still carefully buy around averages, there would. Broken clock is right twice a day. Yeah. I've not heard about, well, maybe I have heard of InvestiQuant, but I would be really skeptical about any edge that is sold to you. And not that there can't be an edge out there that's provided and that you can buy, but certainly not one that is popular and well promoted and has good marketing behind it, right? My eyes need more. No, I think I'm fine. So let's go back to impact. So when you take a trade, every order has an aggregate impact on the market. Okay, this is a consequence of a limit order book that this happens. And there are mathematical models that you can go and find studies on that show why this happens. But it sufficeth me to say that every order has an impact. Now, your one individual order might not have a huge impact, but a large number of retail traders all trading in the same direction at the same time certainly can. If a GME, I think, kind of shows that, right? So if there is an inefficiency and too many people are trading on that inefficiency, they wipe out that inefficiency and in fact actually create another inefficiency the other way. So the aggregate impact of that trade, all of those traders getting in and then all those traders getting out, is they actually lose money. And the only an individual could make money if they're in first and out first, but the group together as a whole is going to lose money, right? So if you have an edge, you should be able to look at that edge and quantify it and say, this edge is on average good for 10 points. So a lot of these ones that I do, they're good for 10 points. And I have empirical evidence that suggests that by looking at that particular edge and seeing how far it goes afterwards and back testing it over a large period of time, right? I can then go and use some of these formulas that we use to determine like the aggregate impact of large meta orders to determine, okay, if you assume that that edge continues to hold into the future, what is the maximum number of contracts that you should trade, right? If you trade more contracts than that, then you're being less efficient. And if you get over a certain amount, you will actually start losing money on the trade, right? So take this back to popular stuff in the markets. RSI is an extremely well-known indicator. It's in literally every charting package out there. Okay. How many people do you think there are out there trading on that specific inefficiency if it still exists at all? And the answer is always going to be too many. The answer is always going to be too many. So are you likely to make money just trading with an RSI? Probably not. You might be able to incorporate it into a larger system, but you're probably not going to be very successful with just an RSI. Not to mention that people just tend to misunderstand the RSI. I have an RSI right now in a slim ribbon. Yeah, so the other issue I have with the RSI is that when you actually go and do the backtesting on it, the reason that the RSI strategy works is because it takes on excessive risk, and not really because it has like a good probability. So if you only buy and sell when it hits that 20 and 80, then you will outperform the market slightly, but you'll have larger drawdowns and you're taking on more risk. So it's not actually. But then if you go in and you put a stop on it, like you want to scalp with it and you want to say, I want to hold a 16 tick stop, and you're just trading RSI, you will lose money. Straight up, the data that I have from backtesting is that you will lose money. No one is using one technical, I hope. Oh, that's probably true too. Okay. But so then you take the next step. I mean, I think you're on the right track there, Blent, which is, so then you take the next step and you say, okay, but what if I combine this and this and this and all of these indicators into this specific situation, and then I should be able to find a market inefficiency, right? Okay. Why that combination of things? Why that combination of things? What is the specific market inefficiency that you're trying to take advantage of there in that case? Because if you're just combining a bunch of things together randomly and it happens to show some profitability over an amount of time, that could be completely random for all you know, right? So here again, what's the market inefficiency that you're seeking to capitalize on? And and quantify that. How much is it worth? How many contracts can be traded on that inefficiency? And then how many other people out there will have found this, right? And so this gets into the issue of complexity, because a lot of people say keep it simple, and I disagree. So a simple strategy is going to be easier to execute on, yes, but you're also going to have more competition for it and less probability of it actually being an edge, right? Whereas if I go and do something like order flow, for instance. So in my opinion, order flow is not really any different fundamentally from your technical analysis, right? It's just the technical analysis of volume and limit orders rather than the technical analysis of purely price, right? Why does that provide an edge? Well, a lot less people have order flow. Significantly less people actually trade order flow, and an even smaller percentage of those people actually have the tools to be able to program and backtest those to see what kind of edges exist in order flow. So I think that if you learn how to do it, and all of the tutorials that I have on my channel where I'm teaching you programming are kind of geared towards teaching you concepts that you'll need to be able to write your own order flow indicators, you're going to find it a little bit easier to find an edge in there because there's less competition for those. Less people look for edges in order flow, right? Even less people look for edges in depth of market because you don't really have historical data for market depth that you can actually use. Okay, but if you have that, I've been working on that, but I've had some issues with it. I need to revisit that again. But if you have that, and you can find market inefficiencies using that, then you have a huge advantage, right? If you can use a machine learning algorithm or some really complicated math that very few people understand, you know, it's all of these little things. It's kind of like if too many people trading something makes it unprofitable, then you need to go and find the things that other people aren't going to find. Right? Gary says yawn, but it's probably the most important thing you could understand as a retail trader. Like, I find it quite striking that quant firms, high frequency trading firms, banks spend so much, and I mean it's literally so much of their effort trying to measure their market inefficiencies and their impact on the market and develop models to reduce their impact on the market. And retail traders think that it doesn't matter. It's just kind of you snort a line. I should probably get some water, but this thing's just not going, is it? Sid says, I get demotivated with the notion that Wall Street employs hundreds of PhD and mathematicians, and we as retail traders have to compete against it. Well, it should. I mean, why do you think that the success rate for retail traders is so low? It's because the competition is stiff. You want to, they've got PhDs. You're right. Like most of the people that I met at Goldman Sachs that were going into the quants, they were PhDs in math and so forth, and had done research at school, and that's how they were found. And then you got all of these retail traders that are just trying to use the average of price. It's kind of like, I mean, I found some things that kind of work with that, but it's not the best edge that I've found, let's say. Keller, you're saying you guys are probably way beyond the questions I'm asking, but I need this kind of conversation. No, you're really not. I mean, this is the thing that you usually don't hear, right? You've been looking at MVIS. Well, you were talking about that the other day, weren't you? Stiff competition and leveraged retail traders are typically extremely over leveraged. Oh, that's a really good point. Right. Now, where can you find an edge when you're competing against that? Well, there's a couple of things. There are a couple of places where you can find it still. One is that in order for a firm to really make money on something, they have to trade a large number of contracts. Otherwise, the percentage gain that they get on it isn't very much. Okay. So there might be an edge out there that, you can trade with one contract pretty reliably and make money on. That you could find that. And at that point, it's such a small edge. You're not competing with the big firms for it. You're only competing against other retail traders. And especially if it's something that's sophisticated enough that most retail traders aren't going to be finding it, and you can find an edge. And that's the majority of what I do, I think. Well, not the majority, but it's a big part of what I do, right? Another thing that can bring you an advantage is understanding the news, right? So in my video, I talk a lot about why you're able to find edge in those kinds of situations if you really understand the economics and everything behind it. Because when you get those big market moves, these huge guys have to reposition themselves, and they can't do it efficiently. Essentially, they just have to go full bore and hope that it all works out for them, because they're flat-footed. They're just too big. So there's all of this market inefficiency going on, and you as a retail trader can take advantage of it. That's why, probably beyond them being able to quantify their edge, the other big thing that a lot of firms do is being able to watch the retail order flow to determine if there's informed trading, and not take fills against it, which is basically the whole thing that Citadel does, right? What does that tell you? You have an advantage in that situation if you can get the price. And the whole thing is if you're able to make the interpretation of the news that the larger market is missing, or you're able to be faster than other people, or whatever the deal is, you can make money from that. You get in before the big rush of people comes in, and before the market orders can pull. Possible. It's possible. It's hard. It's like going from reading a pamphlet on what's the stock market to some complicated logarithmic inverse options for beginners that I don't even begin to comprehend. Well, I think the first thing is program, right? Learn how to program and just make simple strategies. Just test a simple moving average, and then change it so that test a simple moving average with your entries or exits and vice versa. And then test a simple moving average with a set stop and target, and see what happens. And then use NinjaTrader to parameterize some of the variables and determine if, change the period of the moving average and see how that impacts the strategy, right? That is just the most base thing, right? So you're going to go through all of those, okay? And you can go through and you can backtest literally every NinjaTrader indicator that comes with the platform, right? And you can combine them in infinite ways. The issue with indicator soup is that robots can find indicator soup too, and just kind of, find something that works and randomly. But anyways, what's good? What you're going to find is that after a month or two, you're going to get bored. You're going to be like, these are all the same. They're all just doing a statistical analysis of price that doesn't even make sense because price isn't Gaussian distributed. So, okay. How do you find the edge? And then you're able to go beyond that and start to say, okay, I need a type of analysis that's more sophisticated. And when you start searching for a more sophisticated analysis, you're going to start to run into things that retail isn't doing. You're going to find this indicator or this way of doing things. You'll read a paper, or you'll read a book, some strategy that doesn't come with the platform, that no retail trader knows about. And then you can go and you can do that analysis on it, and you might actually find something, right? But there, you're able to find that edge because you used more sophisticated analysis. All right, my mouth is just dry. Or hire a programmer at $5 an hour. I just, you know what, though, Sid, just my opinion. I don't know how you could like provide empirical evidence to back this up, but I don't think that trading in NinjaTrader is that hard, and it's something that I think that just about anybody can do with some concerted effort put behind it. So I'm a professional drummer and chess fan. Well, there you go. Well, improvisation, so it's okay to trade it discretionarily. Like, I take discretionary trades, right? And I've been doing okay lately. But you still want to do the programming to actually like find the setup, right? So the issue that I have is that I've got like these setups like my robots take, but then I kind of have my own way of doing things that's like, okay, yeah, but that's so against the trend. In this situation, going short there doesn't make any sense. Indy went short. Why go short there? It makes no sense, right? So like there's certain things that you might be able to see that are very difficult to program, and you can combine them, and then you go and you say, okay, here's an edge that I know exists, and then here's something that I know about the market, and you can combine them in ways that no robot or person that's only doing that thing can, right? But to the point, I think that if you really want to do this, that it's starting to get to the point where you have to know how to program. And it's something that I think that all of you are capable of doing. If you've found my channel, you're probably capable of learning to program. and I feel like that I give you all of the tools on this channel that you need. Okay, you know what? My mouth is just so dry. I'm going to go and get some water and I'll be back. I hear some traders in some parts of the world actually keep. Well, yeah, well, wait. Where did it go? Where did my water go? Yeah, I don't have a large enough water bottle apparently to last me a whole session. And sometimes I get into this situation where it's like the water just goes right through me. This guy is back. No. Oh my gosh, Color. Like some of the people that I've had come in here, like this is the thing that I think is so funny about this situation, is that the questions that you're asking me and the things that you're saying to me are indications that you could actually be good at this. Okay, there are some people that come in and the attitude that they take in the way that they approach things is basically like, well, they're doomed. They're doomed, right? Sometimes you get this kid that comes in, they literally don't know anything about what they're doing, and they're so confident. They're so confident that they're just going to be amazing at this. And it's like, okay, yeah, but like, what is it about you that's can make you so good at this that you should feel so confident? Because nobody should really feel that confident. And that's where I say, especially the person that comes in and is immediately recognizes where they're inadequate and is humble about it, has a 10 times greater chance of being successful at trading than other people, right? And then the next question is just, do you actually like enjoy it and are interested enough in the thing to be able to do the things that it takes? So that's probably more the question that you're going to be on, right? Is like, okay, if I'm going to be good at this, probably I'm going to need to learn how to program. Probably I'm going to have to learn some more advanced forms of math, machine learning, lots of things about markets, lots of things about economics. That's a lot of work. That's, I don't know all that much as compared to the amount of information that there is to know. And you're talking to somebody that literally just lives and breathes this stuff for the past 15 years, right? So, it's a lot of work. And some people, they really only wanted the money and they're not actually that interested in the market aspects of it or the statistical aspects of it or any of that stuff. And so then it's probably like, yeah, it probably isn't for you. Like if you just want the money, there are easier ways to make money, Did you ever trade options or backtest any option strategies? So I have taken option trades. It's not something that I do very often, and I haven't backtested anything with options, no. My thing with options is that when I'm trading an option, it's because I believe I know something about the company that the market's not factoring in. And so it's, a little bit of the technical side of that is not, but here again, it's like, yeah, probably there are places in options where you might be able to find some inefficiencies to take advantage of. It's just that getting the data and being able to really analyze it as a retail trader is so difficult. Trading is 100% psychology. It's not. You have to have an actual inefficiency you're taking advantage of. Have you changed broker? Not yet. So I'm still at AMP. I'm still not sure what I want to do. I'll probably be another month or two before I do something. It's still like I kind of want to be off of AMP, but I'm not sure if I really want to go to NinjaTrader or if I want to go to EdgeClear. EdgeClear is doing all sorts of interests. So they have They have something that kind of helps you with your performance, and apparently they have other stuff that they're developing, but it's not ready yet to talk about. Like those guys don't just like sit around; they're like doing stuff, and I think it's interesting. They're a brand new broker, and they're already like thinking ahead of most of the other brokers on these sorts of things. So that's cool. But I would. There are things I like about them too. Yeah. Future Trader 71 owns. Well, I don't know if he's the owner per se, but yeah, those guys founded it together. What about TradeStation? I honestly don't know a lot about TradeStation, to be honest with you. Which I know is kind of crazy because TradeStation was like the first ones to have like backtesting and stuff. I guess one thing is they have like their own language, easy language, which I'm not like, would rather use C#. What's going on with AMP? There's not really necessarily anything going on with AMP per se. So one of the things is that I really need to have the broker set like a set limit, because even though I feel at the moment, I feel like I have some good control over it, I've definitely had periods where I didn't, and I would like to be cut off. That's what attracted me to Edge Clear first. But any of those brokers, you can have them set a limit. But AMP has also been involved in, like if I have a problem, sometimes their support isn't as good. There's been court cases with them. And overall, I feel like, yes, they are the best discount broker, but I would prefer to give my business to somebody else. Right? And I really like the Edge Clear guys. But I'm starting to wonder more and more if I have to just go over to NinjaTrader, to be honest with you, because otherwise how will I ever run my robots live? I can't run my robots live unless I do it with NinjaTrader, really. Now, I haven't worried about that too much because one is that I think that all of these strategies could use a better way of looking at trend, and so I think that there's still some work to do there. I have some ideas. Maybe we'll test those out today on the trend. But then the other side of it is that there appears to be this issue where they will make money if you trade them on ES, but not on MES, or vice versa. And I don't know why that is. And so until I can really understand why that happens, I don't feel comfortable trading it. Oh yeah, you can use Interactive Broker with Ninja. I don't really have any reason to go to Interactive Brokers though. I'd rather just have a futures specific. Which court case? So if you go to Futures.io, you can read about that. They sued Futures.io, and Futures.io won, essentially. I'm going to trade with my friend's capital, and I will get paid. Well, you'll probably lose it. Found DataCamp to be pretty good at the basics of programming. Well, so my approach is just, so I have a video where I explain to you the main functions in NinjaTrader. So this is where everything happens in NinjaTrader. That's the first part, is you got to understand the control flow of the program. And then the next thing is I teach you advanced data structures so that you can organize your data in a way that you can do more sophisticated analysis on it, right? And that helps you understand like order flow things. Okay. Then from there, you can open up every strategy in NinjaTrader and look at the code for it. So from there, you just kind of take other people's codes and make a little changes here and there to see how it changes, right? And that's how you learn. What about the young Bitcoin millionaires who knew zero programming and are raking millions just from holding? They got lucky. Like, you realize that the number of people that have made millions of dollars from Bitcoin compared to the number of people that have lost money from Bitcoin is like 1 to 10. But you could. I wouldn't necessarily recommend buying it here if you want to be a millionaire in Bitcoin. Maybe certain altcoins you could get away with it. Maybe if you owned a few $100s worth of garlic coin, and we'll get lucky and garlic coin will take off. Yeah, I just keep thinking about the garlic coin thing because it's doing so well, and there's the Dodge pump, which is just ridiculous. It's like, if there's anything you would pump, why wouldn't you, for memes, why wouldn't you do garlic coin? Do something with a low supply where you have a larger impact. See where they're at. I wonder if they've pulled back yet. Nope. Oh my, they're almost to 2 cents. Like, oh wait, that's the market cap. That's not price. I keep forgetting that. Okay, still almost to 2 cents. There was one spot where it was 2.3 cents, but yeah, that's a long way to go to $1. Did it really open at 3.2? That's silly. It just fell so hard at the beginning. That's a little bit better of a look now. Now look at it. Man, that chart just looks so great. I don't know. Maybe it only goes up to there and then dies back down again, but it's looking pretty good to me. Anyways, I guess I'm not saying that you can't make money from trading if you don't know how to program. I'm just saying that you're going to increase your chances a lot if you understand this stuff, right? Because there's so many retail traders that think they know things, and then you'll go when you backtest it and you realize that they're all misunderstanding. Like, that's why I think you will find myself bringing up RSI a lot more often, because I think that RSI is misunderstood. Everybody thinks that it's giving you a probable buy location, but it's not. It's giving you a buy and sell location that maximizes the amount of risk that you take on, is really what RSI does. And if you're trying to hold any kind of a certain stop, risk reward level, it is not have good probabilities. And so all these people say, oh, RSI is something that works and it, will give you a good prop. No, it works because you take on more risk. Then taking on more risk doesn't necessarily mean that you're going to be long-term profitable. When you take on more risk, what you typically tends to happen is you do all right most of the time, and then the next big risk event comes along and you get wiped out. Check Discord here. Not a whole lot. Not a whole lot going on. I should participate more on Discord. You just use a filter. So, I mean, I've taken all of my strategies here and I've run them through filters, and they don't work. So, it seems to me that the trends from just a moving average isn't effective enough essentially what will happen is it will maybe increase my win rate a little bit, but it reduces the number of trades so much that it's not worth it. You make less because you take less trades. You're taking half as many trades, but you increase your win rate by like 1%. It doesn't work out. Does EdgeClear use CQG? You can use CQG or Rhythmic with them, I believe. Do you think EdgeClear is better than him? I do. I don't know how they fare on like commissions, but I think you get better service. Like the thing that's so funny is that you got to realize what your broker does, right? Your broker is there to bring people in first and foremost, and to provide support and like help manage the risk. So if you're getting like the bare minimum of service, which is basically what you get with AMP, oh man, yeah, the Axia does. I mean, there are people at Axia that have made money in the past. Remember that the guy that they blamed the flash crash on used to work with what was Axia back when they were Futex. You know, Futex went under, and then some of the best and most trustworthy traders went and formed Axia. So there are people over there that have made money, and it sounds to me like they continue to make money. Although I'm sure that they're supplementing it with what they make on the education. I don't know. I haven't taken any of their courses, so I can't say like, is it worth it for the price or anything like that. But can you explain what happened in the flash crash in short? Well, the main thing is that in a flash crash, liquidity pulls. So basically, people weren't putting market bids on at all, and so the market orders, the selling would just go right through it. But they claim that part of what caused the flash crash was this guy spoofing orders and fooling the market making robots to cause them to overreact to it. So the market making robots think something's going on, they sell it, and then because they all pulled, the impact of the sell is stronger, and then you get all out chaos. The thing that I find so interesting about the flash, like we think about the flash crash, but if you're talking about the issues with the robots and market liquidity during times of volatility, probably your best example was the volatility crash in 2018. That was way worse because that was like a flash crash for like a whole week. Do you go short there? I'm thinking that I have to get out here. I'm not exactly seeing the market makers pulling their bids per se as it came down there, but the volume was very clear, right? I get my 10%. Assuming that you make money, you gotta realize one too, but that your base probability is that 95% chance that you're gonna lose money. I wouldn't, unless you've already been trading a long time, but then you would feel confident and know exactly what you want to do, right? I mean, I don't really know your specific situation or anything, so I guess I'm not qualified to say, but just based on what you've said so far, it sounds to me like you should probably trade sim first for a while and not just use that money, because you might just go right through it. And then you'll look back 2 years from now and you'll be like, oh man, if I could have traded that with what I know now. Well, I don't know, man. Sure turned down fast, didn't it? But it might just go back up. Could have taken 40. I guess at this point I should do that. Or maybe if we continue to take trades, we should just bring our stops in. So let's do 8. More secure. I mean, I don't necessarily know what you mean by more secure. Let's put it this way: if there was some sort of really crazy thing happened and a bunch of futures brokerages were going out of business for I can't even imagine why, but if something like that was happening, I think that AMP would be the first one to go, and EdgeClear would be one of the last. Let's put it that way. AMP is like the Robin Hood of futures. Oh my gosh, we have to debate on witness testimony in Trump's impeachment trial. Okay. Not sure what witnesses it is that you want to call, but okay. Okay, you self-studied for trading 2 years and you have pirated courses and you made money on Simul. Okay. Okay. As long as you're not, because you were kind of talking like you were like brand new or something. You have lots of courses, I'm assuming that probably you've found. So people have shown me a pirated Axia course before, but I didn't look at it. I'm not in a live position. I have a simulated trade on right now. It kind of looks like I maybe got in a bad spot. I know when I'm thinking, he's like, oh, he was interested in what my position is. That always makes me uncomfortable. How much are you paying for a real-time data feed? Well, so the feed itself is like $35 a month. So, and then you have to pay the $50 a month for the trade license, right? Which is kind of rough because on micros, if I do really well, I might be making 300, 500. So it's a big chunk of what you make. But right now I'm not feeling too confident about my what do we say, the discretionary trading, because I've been doing okay the past week, but like today wasn't particularly great, was it? So I'm seeing some movement there in the treasuries, and the E-mini seems to be reacting to it, but I'm not sure what's going on there. The only thing that I really see significant going on is the dollar is falling because the yen has taken a rise. Well, and the British pound is moving up today as well, but the yen is the one that really stands out to me. So it seems like something may be going on. Gold is really going too, by the way. So you're trading really count? Yeah, well, I'll switch between them. So I can switch accounts here essentially, and I will switch between my live account and the sim account based on how I'm feeling. But I haven't been trading it live for a few months now. Ninja is better than Amp. Well, I don't know. Ninja, you get the platform. That's the thing with them. I don't know how good they are, particularly as a brokerage. Goldman analysts estimate that a hike in the minimum wage from $10 to $11 an hour is more likely than Biden administration's $15 an hour proposal. Sure, okay. So I might be okay here, but the market seems awfully directionless right now, doesn't it? Kind of makes you wonder what caused that overall sell. The overtrade imbalances. So I don't really pull up footprint charts, but imbalances is definitely part of what I'm looking at, right? I mean, I prefer the volume to be going my way, generally speaking. Well, let's see here. Looks like, by the way, while we've been like not paying attention, GameStop has been pretty not looking so hot. Need to zoom in on that part. Not below Friday's lows, but kind of down there. Maybe turning up. I don't know. I don't have too much hope for this to do anything super significant until tomorrow. Not looking too bad for all those that chase FOMO. Yeah, well, again, it was like, I think that the overall trade was good. The trouble with the trade is getting the correct out spot, and the correct out spot is when the shorts are covering. And it appears that the shorts covered and they didn't realize it, and now they're still in denial about it. If you had taken the trade off right when we got those first indications that had happened, it would have been a great trade. I've been on Sim for 8 months now, and my profit and loss is a complete whipsaw. Looks like my dream to be a $1 million trader are getting crushed. Well, the question is, how much consistent? I mean, because some people, they think like, I want to be profitable every day, and if I'm not profitable every day, then I have a big problem with it. But that's unrealistic, right? No, I don't know. Do you have any info on the short interest on ALPP? Well, somebody was talking about that last week, but I don't know. We get short interest data tomorrow. I don't know if that stock is included in all of that or not. I'm thinking, can I just see Trading Floor Audio tweeting about how Bitcoin is up to 44 today? Okay. I'm kind of wondering if this is kind of another bit of Elon trying to push his execution impact. They bought it way back here, and now they're telling everybody that because they know that that's going to pump it up here. But because I feel like that if that's the only reason that it's moving up, that a pullback is likely. I keep hearing that the shorts are lying about closing out. I do too, Keller. But like every time I read an analysis of why that is, it either makes no sense or there are things in their analysis that I know aren't true. Well, that one I was just getting off of my Twitter feed, off of TweetDeck. So I have a link to that in my video about news that I put on the channel last week. And then the Squawk feed that I'm using is Financial Juice, the audio feed rather. It's so close, but it didn't get there. Only 150 to get funded, yeah, but no, see, your link's not going to work. So I have a video about combines, and you can go and look that too. But I'm still of the opinion that you're better off trading your own account. And you can go in and you can fund like a $400 account with AMP or with NinjaTrader, and then you'll pay the data fees, which if you're doing, CQG is like $25 a month or whatever. And then just trade it sim instead of doing the whole combine thing, because you're probably going to fail the combine, and then that $150 is just down the drain. And you could have used that. You do the combine like what, 2-3 times? Well, usually a combine to pass it is going to take you 2 months anyways. So it's like you do the combine once, and already you would have been better off just saving up for an account and trading micros on Sim. Does AMP? No, not to my knowledge, but I don't think the AMP has done fraud or anything. There's been court cases about disputes between them and Futures.io, them claiming that Futures.io was posting false information, but it wasn't false information. It was just true information about AMP that wasn't particular. I forget what it was, but yeah, Greg is right. First step tightens the size. The second step tightens the size. Well, I don't know how they do add another rule in there that makes it a lot more difficult. He's better off going to a prop. I mean, you get like a once a week coaching session, but I really don't think they do all that much for you, to be honest. I don't remember what it is. If you go to Futures.io and search around Stupid Bot, you will find it. I guarantee you. It is all over on there about AMP futures. Or just go and read the thread about AMP, like in the brokers and platforms forum or whatever it is. Yeah, I just cannot recommend the combines. These guys just make money on people failing combines, and I just don't see how it makes sense when you can fund your own account. I see other channels, they get affiliate setups with them and they're 100% all in on the combines, and I'm like, why don't you just trade your own account? And then they'll lose tens of thousands of dollars in a day and blow their combine account and have to go through it. And I'm just like, oh, that's why, because they know eventually they're going to screw up, and so they're not willing to put their own money at risk. Hey, look, I'm not putting my own money at risk right now. I don't feel too great about my trading in this market. Maybe I should, because I've been doing okay. Today, I basically break even. They prey on people like real estate, no money. Well, yeah, and that's the other thing is that I do think that's probably true to some extent, RJ Will. Like, their primary audience are people that haven't really traded before. Like, I think that's a real problem. Your primary audience is exactly the audience that is unlikely to pass the combine. What does that tell you? You know, if I was a prop firm and I wanted to hire retail traders, I would do something like, like some of them do. Let's go look at the Jigsaw. They still have the leaderboard, right? They said AMP is undercapitalized. That's probably true. Like I said, they're a lot like Robinhood. I mean, I'm not too concerned about it. Like, I use them. They get cheaper commissions. I'm just saying, probably you might be happier with somebody else. See, there's this leaderboard. Well, we don't want to do daily, but monthly. Okay. So here's a guy. Will it show us his trades?
Block sell.
No, I wish that it would give you like the details per se. What is it? Oh, we need to like expand it like way out, maybe. There we go. Close P&L. Show all trades for the month for this guy. Well, he does from time to time. He'll make a big loser, but that's not too bad for a month. 22 entries, all in ZB. Really? Well, this guy seems pretty good, to be honest. Well, now let's see here. What about MAE? 5, 4, 5. MFE is like 5, 6, 8. See, this guy is good. This guy is good. I mean, that's like 1 month. But what is his name? Mises? Maybe he's watching the stream. There was somebody coming in earlier that was talking about trading ZB, and they sounded like they were doing pretty good, right? But like that's like, oh wait, 285. Well, how come I'm not getting that's like only 1 to 22 of 22 entries? Like what? What if I do this? No, that'll just give me the 12. Well, I don't know. I don't know how to look at his whole stats. Max drawdown 350. I mean, like, that's pretty good. I think I've gotten into the 60s or 70s before, but only for like a week. You can come in, you can see what this guy is trading. He's trading the 10-year. Hey. That's unusual because it's usually the top guys were always equity traders, but now it's showing me that there's some guys doing it in treasuries. Well, there's somebody doing it in ES. This guy is a little questionable, but still looks pretty good. Yeah. The only problem is that we kind of get like a cherry picked time frame. But my point is, if I was a prop firm, that's what I would be doing. Is I would be coming in here and I would be looking at traders and like look at like 3 months worth of trading history and see what they're doing. You know? Does AMP have like account insurance like here in Brazil? If a broker declares they got broke, you can receive back up to 50K that you had in it balance? Yeah. If you pass a combine, you can take a micro account to a macro margin level in a month. Yeah. You know, I was thinking about that the other day though, like looking at my robots and their drawdowns. I don't think I would feel comfortable trading the combine with the full ES contract, which is why I'm a little like, that doesn't seem to all work out, you know? I would have to do like one of the bigger accounts. And I don't know if I want to do that or not. I don't know if I have enough data yet to feel confident doing that, at least. Anyways. But then I'm like, well, most of the people that used to pass the combine back when I was really, you know, involved in it were trading the E-mini, and micros didn't exist back then. And I was just realizing how much leverage these people were using to pass combines is just like, oh my gosh. You guys seem really concerned about AMP futures today. Why is that? To me, it's like, yeah, they're not the best broker. I wouldn't be too concerned about it. To be honest with you, which broker you choose for, you know, 99% of the time isn't gonna matter. What your platform is matters a lot more to how you end up trading, right? Broker doesn't really change your strategy at all. They're all, you know, the differences in the commissions. I've never seen an instance where the difference in commissions was so significant that it would actually make a difference to like whether you were profitable or unprofitable, at least. Well, they're turning down. I was kind of wondering if I should take it short there again, but is Ace still there? Did you take it short? Have you used your? I've played around with it a little bit. Yeah, there's things I like about it, and there's things that I don't like about it. Big thing is Zero Charts isn't very user friendly. It's a very settings are all in weird places, and this is kind of like haphazard design. It seems like to me. And it's a lot harder to program order flow stuff with it. So that's kind of why I didn't look into it a whole lot more. Even though I know that you guys all, like most of you guys, are using Zero Charts. I think Zero Charts is probably the most popular in this room. What if I deposit and they go broke? Then tough. I mean, don't put too much money in there. Don't have $100,000 in there. That's all. Or just don't use them. But I guess the point I'm making there is that like the chances of that happening, like I've never seen that happen before. I've never seen a brokerage go under. I don't know what the chances of that happening are. I don't feel that for a beginning trader just starting out that is maybe only funding like $1,000 account and is probably going to blow that account long before anything like that happens. I don't think that it's really a significant concern for them. I'm sure someday it will happen and then maybe they'll be first on the chopping block, but the chance, you know, I can't even begin to fathom what the situation would be that would cause that. Like even like we just had like the biggest VAR shock with this whole GameStop thing, and they just stopped trading new shares of it and found more capital and they were fine. So makes sense why a lot of brokers, especially the ones that are like the most popular, would decide to not be as capitalized as some others. They make more money and the chances of something happening are extremely small. Doesn't mean it's zero, but man, I've been getting a lot of spam risks calls from my phone lately. Okay, so the turning back down, probably should have taken that one. I was thinking, like, should I get in at 39.01? Right here isn't necessarily a great spot to get in, but there's definitely some selling, some aggressive selling there. Well, you can't do edge clear. If you want to do edge clear and trade micros, you have to have at least 1,500. Thus you see why so many people end up using AMP. I tell you what, I think that for a futures broker to like truly go under, they would have to be doing some pretty shady shit, don't you think? Like even beyond what maybe AMP does. I don't know. I would be absolutely shocked if any futures broker ever went, you know, completely under and lost all of their money. You know, people had money and they weren't able to pull it out. I'd be very shocked. for you, I would be more, the thing that I would say about AMP, which is the downside, is that their support is not as good. This is not. The people that I talk to, usually, like, there's one or two guys that like really know their stuff, and then there's a bunch of other guys that don't have a clue what's going on. And I very often know more about what's going on with the software than they do. So that's the one where like you're having trouble with your software and you need help. They're not as good. Come on, just a little bit more. There's an iceberg at 38.97. So this is one of those situations. I want to keep my risk to 8, but if they get through 38.97, what do you think the chances are that they trade 38.96? I'm gonna say pretty high, but maybe they can't do it. Maybe that iceberg down there is too strong. Software. So I like to use Jigsaw Day Trader. And if you want to program and stuff, then you'd use NinjaTrader 8 is what I use. Look at that. So what this is telling me right here is that if this had been a live order, there's a possibility that it would have gotten filled. When it's 2, sometimes the Jigsaw tends to be a little bit more stingy than live would be. So you said AMP software? Nah, so if you're going to go over to AMP, then your software that you're going to be using is going to be like either Sierra Charts, Jigsaw Day Trader, maybe you can use Trading View. Because you really can only use NinjaTrader with NinjaTrader these days. Well, you can use them with interactive brokers and stuff, but you can't use them with CQG and Rhythmic unless you're on NinjaTrader brokerage, which is really annoying. How much do you spend? So if I know I'm not going to actively trade, then I don't pay for the $50 a month live trading execution from Jigsaw. So that's $50 a month. And then the monthly fee is $35. That's just for the data. So it can be as much as $85 a month. Yeah. This, by the way, is why we're trying to get people to go in. I want to do market by order data, but that's like another $100 a month, which right now doesn't really make a whole lot of sense for me. So that's part of why we put together the indicator package. Otherwise, I would rather keep it to myself. But we want to get it so we get enough people going in on there consistently, then we can start getting market by order data and try and program off of that. Well, I think I need to scratch this. If they'll let me. This is where you kind of get into that, like, it's exactly in the wrong spot. Did one of you guys try following my trades? How many people have signed up to use the indicators? Sure. It's not a ton. It's not enough to pay for the data, I'll tell you that much. It's like 3 or 4. Let's go find the exact number that it is right now. How many subscribers, paid subscribers do we have? have 4. And I have to say, or I guess I should say, I don't have to, but my approach is there's only so much edge in certain things. Now, the indicators that I give you have such broad edge. Like, just for example, one of the things that you get is a synthetic dollar index. Okay, so is having the dollar open for you an advantage that you have? Yeah, because a lot of retail traders can't see the dollar and have no clue what it's doing or how it factors into the system, right? But is it something where, like, if 20 retail traders were trading that it would be a big deal? No, probably not. What about this one? This thing right here? Well, I think that if there was thousands of retail traders trading off of this data or information, I think it would be a problem, yeah. But, 10, 20, nah. And when I go and I look at my own, like, the stats, the trading strategies that I've come up that utilize this information, looks like there's plenty of edge there, and you could find and I'm not sharing those strategies per se, but I'm just thinking, like, all the things that you can find with it, how many are there? So I think that I could allow a good number of subscribers, but what will happen is if we get up to the point where we're getting a lot of subscribers, then what I will do is I will make new subscription tiers. So the people that are already subscribing will be locked in with what they started paying for. But then I will create a new tier for new people to get in that will be even more, just so that we'll keep the total number of people that can actually use it low. Does that make sense? Did I explain that well? I don't know if I explained that well. I guess the point is that we'll have like specific goals that we want to, about how much we want to make and what we want to do with that. We want to pay for MBO data. We want to be able to pay for other things for the stream. I'm not looking to make a living off of it. And the number of subscribers that I'm ever going to have from it is going to be capped. So, because it was just like I was saying, like, if too many people have it, then that's going to hurt the edge. Yeah, some more selling pressure after I got out. I really felt like that was a good trade and that I should have gotten filled there. Maybe I should have lifted my bid up when I saw that the iceberg there and just been satisfied with that, I guess. But it was like I was second in line, so it was like, why would I not get filled? But I guess not. Not according to the simulator, at least. See, now I'm getting into this, like, I don't know what the deal is, but my body doesn't retain the water. My mouth feels so dry. I want to drink water, but then I already need to go to the bathroom again. So the water is just going right through me. More so, but the bulls are also deciding. I don't know. When I look at this market, so let's go back through all of our instruments and see what's been going on, right? So let me come back over to the charts. So if we come back over to here, so the E-mini, okay, we were up overnight. There was a little bit of a pullback, and then by the time the open came out, we had pulled back to where it was. And since then, they've been trading around in a range for almost 2 hours now, and they haven't really done much of anything. And the amount of activity in the E-mini is very low. Okay, Treasuries pulled back a step, but wouldn't necessarily say it's huge. So the Treasuries aren't too interesting either. Okay, oil did have a pretty okay move, but that's pulling back. Okay. So that's not too interesting. And then there's gold. And gold moved. Gold made one of the more significant bull runs. If gold is able to hold its gains, because, I mean, we have had runs, but then they give up all of their gains. If gold were to somehow keep its gains today, that would be really significant for gold, don't you think? Silver going okay too, not quite as good. And what is really moving? The dollar. The dollar moved back down, and some of the currencies moved down. Diabetics have a dry mouth and pee a lot? I don't know. Well, I had eggs and cooked it in olive oil, so I feel like that I got a decent amount of fat, actually. I don't know. I don't know. Anyways. AGOGE. You didn't listen, you might have made one call. So I absolutely do not put up with I'm going to come in and I'll give you something one time, and then the one time that I'm right, I make a big huge deal out of it. So we had, for instance, Ace come in here. It was months before we started to see how consistent his signal was. And then we back tested it, and we learned a little bit more about it and found out that it's more complicated than just it's a good signal. So I'm absolutely not impressed by somebody that comes in and says, look, I told you what happened. That's like one time. Okay. Show me after 10,000 times what it looks like. How often do you win? How much do you make when you win? How often do you lose? How much do you lose when you lose? How streaky is it? How many losses in a row do you have in that particular strategy? What was the maximum drawdown that you ever experienced with that strategy? What is the Sharpe ratio of that strategy? What do you make compared to the overall market? These are things that matter. And when somebody comes in and they try to make me be like, I won this one time, and I'm immediately thinking, okay, they're trying to take advantage of people that aren't doing a sophisticated enough analysis on what the strategy is. So I'm not impressed. I'm just not. A gambler versus a trader, sure. Listen, I mean, I can give you strategies that work in certain markets. In this market, just you fade the edges of the range and take a double risk reward ratio. So look to make 8 ticks and risk 16. And in a range bound market like we've had today, if you go in and you buy like my indicator, what do we call it? The inventory cost basis levels. You know, when you get tells through those levels, see that in the upper middle, buy, sell, buy. Perfect. Okay. That would work in today's market, but if you trade that over a long period of time, you're going to lose money. Shut up, you look like an ass. No, I don't. You know what? I'm going to say, no. You're wrong. Listen. The stats matter. They absolutely do. Okay? I can go and I can give you something and win 80% of the time. And then the market will come along and you get in the bad spot where the strategy doesn't work and you'll lose everything. And I've seen it happen to dozens and dozens of people. There are so many strategies that people share, and then I will go in and I will back test it, and you go and you look at the stats and you realize that there are very significant things about the way that strategy behaves that make it not a good strategy for a retail trader to trade, okay? The risk-reward ratio that you get on the strategy matters. The win rate that you get on the strategy matters. The maximum drawdown that you get on the strategy matters. The Sharpe ratio that you get on the strategy matters. The streaks that you have, the loss streaks that you get on the strategy matters. And if you don't know that information, you shouldn't be trading it. Period. And anybody that comes into this room and is going to suggest otherwise is trying to take advantage of you, is lying to you, and you should not listen to them. And I am never going to sit here on this stream and ever go in and say, oh, well, that guy made a trade was the good that one time. Maybe you should listen to them. And any of them, including Gary, who I very much respect, by the way, including Gary that says something to the lie, just ignore them because they are feeding you bullshit that will ultimately bankrupt you. Period. He probably is teasing me, but that's just like the one thing that I just don't joke about. You know what I mean? You make a good preacher, maybe. That time I was quite riled up. Maximum drawdown matters. Thank you. If you don't think that those stats about your strategy matters, you're delusional. The dialogue delivery. You know what's interesting about that one, Sid, though? You can do it. All you got to do is get a microphone that you can hear yourself on the headphones and regularly talk every day. And it changes the way that you talk. I don't know, because I don't think there's anything particularly special about the way that I talk or that I'm naturally good at it. It's just like your voice just kind of like adjusts and figures it out. So I wonder what Seth will say when I'll say the exact same thing. Show me what happens when you take that trade 10,000 times in the past. Because the things that I trade, I can show you that. In fact, not only can I show you that, but then I can even go into the stats and I can kind of show you why what you're seeing maybe suggests that it's not what it appears. Actually, we should go this way. There you go. There's one of the strategies that I'm trading that's based on order flow. That's J, right? What does it win? 66% of the time. It loses twice as much when it loses as when it wins. And we'll come down in here. It has had 10 consecutive losers in a row, which isn't particularly great, but it's not too bad because that's still maximum drawdown of, well, let's change it to currency. A maximum drawdown of $10,000, which compared to what the strategy makes is good, but for a retail trader, could you trade this strategy as a retail trader? Probably not with an ES unless you have a $20,000 account, right? And why is that? Because it risks more than it makes. It's intentional, but there you go. Look, there's all of that information that I just ran down through that I said matters, right? So, when somebody suggests a strategy to you or they claim to know what they're doing, the question that I would ask them is, can they show us that? Oh, really? Olive oil is not fat. It's polyunsaturated. You need animal saturated. Well, I mean, I eat a lot of meat too. Well, I eat a lot of chicken mostly, but chicken and ground beef. But usually not for breakfast. Only thing I get for breakfast is bacon. I didn't have bacon today. PR said, I read today that trading master Jim Simmons was hit with $5 billion in redemptions. Yeah. Well, the interesting thing about that one is that they have two funds apparently, and the fund that is like all of the algorithmic trading and so forth that everybody, raves about is the internal one, and it was only the external one that did poorly and then got hit with redemptions. It's kind of interesting. But therein is like another point, is even if we have really good stats on something, there's always a non-zero chance that the market will change in a way that makes the strategy not work anymore. That doesn't fucking matter, Gary. I don't care how long you've been trading. You clearly didn't learn a whole lot if you don't think that those kinds of stats matter. I've known people that have been trading for 30 years and still lose money. So don't give me that. So if I can't program, how am I really supposed to know if any idea I devise is worth anything? I hate that I don't know how to backtest my strategies. Well, it's a good question, because that kind of is the big reason why I'm like, probably you should learn how to program. But some things are really difficult to program, and you might not completely understand how you do it and so forth, right? So the next step down from that is in some ways it's actually a step up, is you can trade it on sim with live data, and then you can look back at your trade stats and how you actually trade it and do the statistics that way, right? So you can forward test it. And then if you have a good record, you should be able to see what your average winner was, what your average loser was, what your win rate was, what the maximum drawdown was, and all of those sorts of things. And you can just do that all in Excel. Do you believe somewhat discretionary trading works if someone show you them stats? So if somebody shows me trading and they show me, the more the better, but at least 3 to 6 months, it would really be better to see like 2 or 3 years, though, to be honest. Okay. And of their live trading, and there were live trades, and they show profitability, then that's probably they're good. Sure. And that's where I'm kind of like, yeah. And then you would be able to go and look at their strategy and see, well, like, what are the benefits and disadvantages of it, right? There's so many successful tape traders and order flow traders who rake millions just watching the tape and getting good, as they say the tape never lies. Well, there's many successful retail traders that have made money just off of technical analysis. There are retail traders who have made money just off of, randomly taking it how they feel. Remember, tape reading was reading the NYSE specialist? Well, there you go. I could show you 3 months if I didn't have dog days. I'm working on that. Well, but there's a perfect example, Caio Bartoli. How do you know that your dog days are because of you and not the strategy? Because a lot of people always just assume when something's bad happens that it's them and not the strategy. But a lot of the strategies that I see pushed on retail traders that claim to be profitable and claim to have evidence of profitability are basically set up in a way that you're almost guaranteed to have really bad days every once in a while. And that's why you will see these guys that they seem to do well most of the time, and then they'll have that one bad day that blows the account, right? And then they say, well, I shouldn't have blown the account but I misunderstood something or whatever. But like, you just got to understand that like it's endemic to the strategy. If your losers are larger than your winners, then you are likely at some point to run into a loss streak where you will have a really steep drawdown, and that drawdown will be larger than it would normally be because you're losing more on the losers, right? Because I stopped meeting my risk plan. I hate anything that when the empirical evidence shows that it's ineffective. If you don't have empirical evidence for a particular strategy, then I am more than willing to program it up for you if it's possible. What is your order flow backtest? So the one that I just showed you is based off of temporary imbalances in market orders. You'd make a great anti-theistic atheist. Well, I don't believe that everything has to be proven with empirical evidence per se. There are some things in life where you're just not going to have the information to know that sort of a thing. But in trading, when you're risking your money, I would recommend that you base your trading decisions off of empirical evidence. And I would be really skeptical of the people that try to convince you otherwise. Live action. Not all tapes are the same. Be sure your data feeds are correct. Additionally, you will find different platforms will show a buy when another is a sell. Well, sure, because so the thing is that all of these order flow tools that we're using are based on comparing what the most recent market orders were and what price they were trading at to what the best bid and ask prices are. And because none of that is time stamped with exchange timestamps, there could be a difference in between data feeds and when the best bid and ask change, where if it's different even by a few milliseconds, a buy could be classified as a sell and vice versa. So over the long run, these kinds of little things don't really matter a ton. But can you go in and say like that this was for sure how many market buy orders and this is for sure how many market sell orders? Not with the typical data feed. Now with the market buy order data feed, you can, as I understand it. Stupid Bot says, Anius, that's a lot of data. How did you do that? It took like an hour. It takes like an hour to run the backtest that you saw. Because it has to download all of that data for a year, which you can get from Rhythmic. And then you have to run market replay on it. And, then it takes it. Data feeds are different, which changes the actual trades shown. So the match, what I would call the matches feed should be the same. Like in terms of like at the end of the day, the total volume traded that you see between two platforms should be the same. But your cumulative delta reading that you get is going to be slightly different. It's not going to be different enough that it's really going to make a significant difference to your analysis. How different is your strategy compared to a discretionary person who is good at reading footprint imbalances? I think that what would make this different is that, one, I have a much better statistical way of determining when you've hit a trigger threshold to make it worth it. And two, we are catching a trade in an area that's going to be pretty volatile. And so having the robot trade it is going to get you a better position than if you were clicking it yourself. But that also is why we're skeptical about how well that strategy will actually translate over to live. Because we've definitely seen that even the difference between the micro ES and the ES on sim makes a difference in those areas. So talked about drawdown and risk return, the retail investor being on too much leverage, etc. have like 10 to 1 leverage and 1% risk per trade. It's auto sabotage for sure. Yeah, well, and did I close it? Well, I can't really show you unfortunately, when I load up a strategy that I back tested before, it will show me like the mainline stats. But if you want to go in and show the charts, though, those don't always load for some reason. But if you go and you look at it, the longer term thing, one of the things that you will learn about that strategy is that it does not do well when volatility becomes extreme. So like during the pandemic, that's like that $10,000 drawdown. That's why that's there. So one of the things that I have is I have a maximum daily loss limit where it will just stop trading after that point is an important part of the strategy. And if I was going to trade it live, I would probably be doing some analysis. I have a new part that I'm going to be writing. So, but I'd be using like directional movement to determine if the market is too volatile for it to trade. But I think when you look at those stats, the question is that I think probably the answer is no, right? That's why I showed you that one. I showed you that one in particular because it has good looking stats, but it has a flaw intentionally programmed into it to kind of show to people why it's a problem. So here with that one, you win most of the time, but drawdowns probably bigger than a retail trader is willing to withstand, right? I look a little pale today. I think that I'm probably. Oh, you know, that's probably because I have the windows open. I didn't close the blinds, and days past it's been really snowy here, so it's probably I should have closed it. But you're getting in a little bit more light, and that's probably why it looks a little different. I don't know why Gary is picking on me because I just can't imagine why anybody would disagree with the statement that you should use empirical evidence in your you should find empirical evidence that supports your strategy, and you should pay attention to the stats, and that stats like your drawdown matter. I can't imagine how anybody could argue about that. And when he says things like that, I'm not really sure if he's teasing me or not. It's like, I don't know. It's kind of weird. I think that what happens with Gary, I'm just guessing here, but I think one of the things is that he has a larger point that he wants to make, which is that he thinks that technical analysis can be effective. And so whenever I start going into that, he's reflexively reacting to that. But when I've gone through the data, it seems to me that it's possible to find an edge that is purely based on technical analysis. But they're very, very rare, and they usually are streaky. Which is to say that the reason that an edge like that can continue to exist is because it doesn't exist in the market all the time. There are periods where it works well and periods where it doesn't. Because it's very difficult, if not impossible, for the market to eliminate all market inefficiencies all the time, right? Jerry might have confirmation bias. Well, I don't know. You haven't tested 20 or 30 years of data. Sure, but I can go through and I can back test like 8 years of data and see that something doesn't work. And why is that not enough? Like if it hasn't worked for the last 8 years, why do you want to trade it? You've been a good help with that? Well, thank you, Stupid Bomb. Do you have us? Yeah, so I have if you click the join button down below, if you're trading on NinjaTrader and you want to use the indicators that I have that includes like the inventory cost basis and the synthetic dollar index, then you subscribe to the elite tier for $10 a month by clicking the join button down below. There's also like a $1 subscription option. And if you want to see the day by day information about the Bitcoin model, that is on the Patreon, which is in the video description below. But honestly, if you want to contribute, you do, like you can contribute chat revenue in here, but I would prefer that you go and you get something back from it. So you can click the store down below and you'll get, you get a mug. Go and get yourself a mug. That's way better. What 8 years? What a limited mind and attitude you have, Seth. If the strategy loses money over the last 8 years, why would you want to trade it? It's just kind of, that sounds to me like a strategy that is not suitable for a retail day trader. That seems unsuitable. Bunch of Italian. Is that what it is? I don't know, man. Sounds to me like if your strategy is unprofitable over the past 8 years, that you're probably better off just starting with a different strategy. Try and find something different. Is this where we compare our back test PPs? Sure, we can do that if you want. I mean, I showed you my, you can go down through that window and you can see all the back tests that I've run and saved, and you can compare what you've got, and you can show me if you've got something better. I've seen people show me back tests that appear better. Those are just back tests. You got to be careful with that, though, because there are ways to fool the back tester. So that's another thing. That's a whole different issue. But back tests have inherent, there's a risk disclosure down in the video description, but the back tests have inherent limitations to them too. So I can't say that because you have a back test that is profitable, that you will be profitable when you go live with that. But I can say that you stand a much better chance than if you just have absolutely no clue how your strategy performs on past data. So what about the Wall Street quants who are testing data all the way back 30, 40 years back before they place big bets in the markets? Well, because I think the way that you do it is you go and you say, okay, I'm going to train it on a certain amount of data, and then test it on another certain amount of data. And if it does well on that certain amount of data, then I have some degree of confidence that maybe it works. So then at that point, then it would be worth it to me to go back and back test it over 30 or 40 years worth of data if I have that. Now, when you're talking about quants, Sid, you're talking more about portfolio level strategies. You couldn't go back that far with, an order flow strategy. The data simply doesn't exist. Okay. Nobody was keeping historical bid-ask prices or what the limit orders were 40 years ago. It just didn't exist yet, right? In the 70s, 60s, and 70s. But, you would prefer to go and backtest as far back as you can. I can go back 8 years, but you don't do that 8-year backtest every test, because that takes a long time. That's a lot of resources, right? You make sure that you have something that works pretty well on the more recent data. And then before you run it, you go back and you do, the longest back test that you can. So if you have 8 years worth of data, and that 8 years worth of data shows that it's unprofitable, that means that it doesn't get to the point where you go and you trade it for 30 years worth of data, because it wasn't good enough to make it to that point. So I haven't run any of my automated strategies in live trading. No. I have some things that we can go back and like I did my live trading forward tested, and I kept track of it in a spreadsheet and so forth. So for instance, we had a strategy where we were just looking for, what was it? We were looking for large places where you would get a ton of changes in the level 2, even though you weren't necessarily getting volume coming through. And then we would fade those areas. And we found that overall it was a pretty profitable strategy, but that it had drawdowns that were too big, right? So we forward tested that and we tested it live. These robot ones, we don't know how they're going to perform when they go live. They're still in testing, frankly. And why am I not testing on it live? Because there's still some things that are incorrect about it, or not incorrect, but there are some trades that it takes that I think it shouldn't take and that I want to optimize out. And I'm still trying to find the best way to take advantage of that. So I would consider them still in development. But those are the stats of them so far. Or of J, at least. I'm just, I would put him in timeout, but we got to go right now anyway. So what should we call today? Those who live in glass houses don't cast stones. Well, listen, I can't sit here and tell you I made a ton of money in 2020 or anything, and I don't make any such claim. But what I can do is I can go and do a historical backtest on a specific strategy with a specific technical analysis indicator and show you how it performs. All right, then we'll do that. Your wish is what is, I don't, the thing. The thing. I'll just pull a Joe Biden there. You know the thing. If that's what you want, then we'll do that. Because you're just saying shit that is like objectively false. And then you're like, oh, you know everything. And they're like, I'll explain it out to you. Like when you guys hear them say that stuff, is that the same thought that you have? Is like, okay, Gary says that. Oh, well, you only traded it on 8 years of data and it failed. Well, you should try it on 40 years. And I'm sitting here like, okay, you really want to trade this strategy that has failed for the past 8 years as a retail trader? I hope you have a really big account to handle that drawdown, bud. I just don't. Like, seriously. Am I the only one that's like, what he's saying is just like nonsensical? And then he's like, oh, fight me. Okay, fine. It just... Some form of technical reasons say the portfolio stock should go up, but the market efficiency theory would say that these 8 years of losses are real and the losses will likely continue. Well, that's a good point, Keller. Because we might be expecting a change in the market, right? And we might be able to go and test it on a time period when the market was like that before. And that might have been further back than 8 years ago. And then we would go and test it on the market conditions that we most expect. That could be. I don't know what his deal is. But he's done this too many times now that I feel like I'm being gaslit in some way. Like it is the behavior that I'm getting from him is just not rational. And it seems like somebody that's just trying to screw around with me. And I'm sick of it now. So I as much as I like having people around and he had been useful at times, I don't have to put up with that. And there's always people come into channel that will be, share good information and we can collaborate with. And so there's no reason that any one particular person should be kept around when they're causing so much disruption and literally like I feel like he's like lying to people. Like I come in and I say, hey, like the stats matter, and then he comes back with this like, you know, well, you don't know anything, Seth. That's like, come on, dude, come on. I just pretends to be also me buying Dogecoin. Don't buy Dogecoin. Certainly don't buy any cryptocurrency that's already pumping, like those small ones. And challenge him. Well, this was like the thing. Here's the thing: is that he wants to have some sort of he's trying to goad me into some sort of forward tested contest, but I just don't see the point of that. Show me how you did last year. Why don't you just show us that? And we can look at them and then be done with it. I didn't quit my job at Goldman. They gutted that department. And I don't do this full time. I have a day job, which is why I'm going to leave right now because it's time for me to do the day job. So, do site reliability engineering. Anyways, I was trying to decide what the video should be, what the title should be. Then just show me your historical results. Even if you were doing it with a sim account, as long as it was like trading it on live data, not just a backtest. Of course, Gary claims to be doing it all on live, so just show me your live results from the past year. What'd you pay on taxes the past year? Show me that. I lost money. I totally admit it. I lost money in 2020. No shame in that. It was a bad year for a lot of traders. I made money. I made way more money in my non-trading account, but the scalping, no, it didn't work in 2020. I'm not going to say anything about it. When things like that happen, the best thing to do is to just move on and ignore it. Okay, so today, Quiet Monday. I'm just going to say dollar struggles. All right, guys, stay profitable.